This is Wall Street Week. I'm David Weston, bringing you stories of capitalism, playing dice with the universe, the strange new world of quantum computing, and how it may change our lives even more than AI. Plus, coming to terms with growing older and lower interest rates. As Western nations face growing problems providing for the elderly, we take a look at the largest set of pension assets in Europe and why the Dutch are changing the way they invest those assets. And turning concerns about data center energy consumption into a way to heat our houses. That's what they're doing in Finland. But we start with banking and how regulators in Europe and the United States are taking increasingly different approaches, creating both opportunities and challenges for Ana Botín, executive chairman of Spain's leading bank, Santander. Banco Santander has had a big year. Give us a sense of how big a year it's been.
It has been a great year. Our numbers will be totally on track to deliver all the numbers in our 3-year plan. And again, in 25, we're going to reach our profitability, 16.5%. And for shareholders, great value creation, increasing dividend per share. Our share price is up 100%, but there's still a lot of inherent value in our stock. Our multiples are still very attractive compared to US banks, for example. We're trading at a bit under 10 times price earnings. And we deserve a premium to Europe, and I would say even to the US banks, because our profitability is getting better and we have growth.
What were the main drivers of the success you've had this year?
So I say it's an overnight success, 10 years in the making. So since I took over, I inherited a group of banks. It was a big bank, but many different geographies, different business models, very disconnected. And the whole vision is to bring them all together under a single open financial services platform. And that's what we have been working on. So this year, every single one of our 5 businesses is growing. We have simplified the organization. We sold Poland. We bought in the UK, so our UK business now is at scale. And this is really the opportunity at Santander. We have profitable growth for many years organically.
Santander succeeded in selling half of its Polish unit this year, while other European banks, including Unicredit and BBVA, had a tough time getting deals done. As you say, you sold Poland, you bought in the UK. There were other banks in Europe that tried to do transactions this year that didn't go so well. How come you got it done?
Well, the sale of Poland was the largest cross-border M&A in Europe in a decade. And in today's world, where governments defend their countries and regulation is what it is, friendly deals are the way to go. And so I believe that's the secret.
As you say, Banco Santander, as you inherited it, is pretty far flung. I mean, you've got obviously Spain, you've got Europe, you've got UK, you've got US, Mexico, Brazil. How much is that helping Banco Santander, that diversification?
So in today's economy, either you're large and you have global scale, or you're very specialized. And we have the scale. We're one of the largest banks in the world by number of customers, 180 million. That's more than the number 1 and number 2 bank in the United States together. We have added 60 million customers in the last 10 years. And so, that scale, to benefit from that scale, to have the operating leverage, you need to work across the company. You cannot just work separately by business or by geographies.
One of your goals has been efficiency, increasing the efficiency of the bank. How much success have you had? How much further can you take it?
We're only just scratching the surface of our potential as a group. We have Gravity, our core operating system. We have our payments core system, which is allowing us to reduce cost per transaction in the last few years by 1/3. What is now coming is what you as a customer are going to see, which is the open bank, the front end. This year, we'll have flat to down cost and growing top line. And this should continue into the next few years. And again, organically. We are in markets with 1.2, 1.3 billion people, where we are at scale in each one of them. And building our own platforms is something that very few banks, very few companies have in the world today.
One of Santander's strongest verticals is its auto lending business, working with dealerships at 14,000 points of sale, as well as through its digital platform, Open Bank.
The last 2 years, delinquencies were very low during COVID, have normalized, so they have been going up, but our final loss rate is actually stable over the last 12 months. And consumers are actually, getting up to date on their loans, even though they get a bit behind, so the loss rates are stable. And we're not seeing anything right now that tells us the US consumer, on average at least, is having any issues. It's very solid.
We see interest rates coming down in Europe now. What does that do to your bank and to banks generally?
So the way the terminal rate, and we can have a debate about what that is in Europe or in the US, given the size of and level of government debt, given demographics, defense spending, decarbonization, we don't see that rate being below 2% in Europe, probably below 3% in the United States, something like that. And that is a very good level for banks because it is high enough for us to have a margin, but not that high that the credit gets bad. Rates are at a level that I think will allow growth to remain around 3% globally right now. By the way, that's not fast enough, but at least we're growing.
Regulation may be one thing holding down growth in Europe. In the last 6 years, the EU has added 13,000 new banking rules, while the U.S. came up with only 3,500. Give us your sense of regulation of banks in Europe versus the United States.
Well, I think regulation, like life, is all about balance, right? And so we do believe in smart regulation, but we've gone way too far on certain items like capital. Soundness of banks doesn't just depend on capital, as we've seen. If you look at the capital ratios of some of the banks that had problems, they're pretty high. And so we think, again, Santander, look at our CDS. It's one of the best in the world, including the best banks in the United States. Why? Because it's about a strong balance sheet, liquidity, scale, business model, etc. So, we have gone as far as I think we need to go on capital, and now we need to be supporting growth.
Mario Draghi came out with a famous report. What's been done with that report?
So if your ambition is very high, even if you don't get to that, you're going to do pretty big things. And so this is the thing in Europe. What is our ambition for growth? Mario Draghi gave us a diagnosis. How much have we executed? Not more than 10% in 1 year. So we have to have a much greater ambition on delivering on those recommendations. I've said it publicly, if taxes, every euro we make in Europe, 58 cents go to the government. Every dollar we make in the United States, 42. That's not a small number, but it's, significantly lower. So excess regulation, excess taxation actually is a tax on the economy and growth. At some point, people don't invest. And so this is the balance we need to find. And Europe is getting further apart from the United States, not coming closer.
We also have regulation of banks at both the European level and member state level. To what extent do member states hold things back?
Well, and there's one thing you didn't mention. So there's the regulation, and then that's the level 2 and 3. Here in the United States, there's a lot of talk about the agencies. Clearly, there's work to do in the United States. In Europe, there's even much more work to do, right? And I showed at a conference on regulation, only financial services regulation without the rest of the interpretation of the rules, which is thousands more, 97,000 lines, which is 100 Don Quixotes. I showed it there. And so that is a second level. And then the third is what you say, which is the national rules and regulations.
How do you decide how to allocate your capital for growth? And to what extent is it affected by things like the relative difference in regulatory levels?
Well, that of course matters a lot, right? If other things equal, every dollar I put in Europe, 58 of the profit goes to the state and 42 in the United States. Well, Europe is going to have to give me higher growth or higher profitability or both for us, other things equal, to go there. So yes, it matters. It matters a lot.
There's innovation and creativity in Europe, entrepreneurship in Europe. Do the capital markets support it?
We have been pushing for a long time for capital markets union. We now have the savings union, which is not exactly the same, but is going to be helpful. The reality is that most of SME commercial lending comes from banks. And that is why it's so existential and urgent that we increase the ambition for change. Because we will only be more competitive if there's more investment. This is coming from smaller and medium-sized companies, and a lot of that lending comes from the banks. And that's why capacity to lend has to expand. And that is what, again, regulation, smart regulation would be very helpful.
Is there any prospect of a unified banking regulatory system in Europe?
Well, how many years did it take to build the United States? 200? Europe, we've been going at this for 50 or 60 years, so it will happen. I'm not sure I will see it.
Coming up, we try to make sense of something that Einstein threw up his hands trying to understand: quantum mechanics and the revolution it may bring to computing by doing some things better than AI. This is a story about God playing dice with the universe, something Albert Einstein told us he didn't do back in 1926. Einstein was criticizing physicists' theory of quantum mechanics. Yet, a century after Einstein's denial, billions of dollars are being invested today in taking that theory and turning it into reality, with the prospect of a revolution in computing potentially larger even than generative AI.
Quantum computing is very high potential.
Investors are increasingly asking us about the implications of quantum computing.
Quantum computing.
Quantum computing.
Political and state-level economic support to develop quantum, and we want to be part of that.
IBM is one of the companies leading the charge in quantum computing.
At IBM, we developed some of the very foundations of quantum information science, starting as early as 1970.
Jamie Garcia is the director of quantum partnerships at IBM. A PhD chemist, she's working on quantum computers transforming healthcare at places like the Cleveland Clinic.
Quantum computers are just a totally different paradigm to calculate solutions to problems. And so what most, experts have done today that are studying quantum computing for different application spaces is to really sit down with the math and figure out, are the algorithms here that I can use and that I can exploit using a quantum computer going to bring me any sort of advantage over what can be done today in classical sort of state-of-the-art techniques?
At the core of classical computing are bits, single pieces of information that can have the value of 0 or 1. But quantum technology relies on qubits, a unit that can have multiple values simultaneously. It's like holding a coin in your hand that is heads, tails, and everything in between until you open your hand to check. Physicist Jerry Chow is IBM's Director of Quantum Hardware System Development.
Really fundamentally, there's a different math, right? It's the mathematics of quantum mechanics that is governing how you actually manipulate these quantum bits, which then gives rise to a whole host of different opportunities for algorithms and types of problems that you can actually solve using quantum computers.
As we're studying things today, we're using a lot of something called error mitigation as our approach to dealing with errors and noise in the system and in the quantum computer itself. This is going to continue to evolve. In fact, we think that next year we're going to see examples of what we call quantum advantage, which is where you're able to come up with a solution to a problem that is cheaper, faster, or more accurate than with classical alone.
A turning point in IBM's efforts to make quantum computing a reality came when it made it available to the world on the cloud.
2016, the IBM quantum experience was really a pivotal moment for us in terms of getting quantum computers for the first time out onto the cloud and into the hands of anybody, really, people, right? What's interesting is that before that period, I'd say it was really much more in the realm of physics, right? That we were doing experiments on small devices, qubit devices that we were looking at, understanding how they worked, trying to make them better. But we didn't have any kind of real thought about how is this going to be used for computation.
In the 9 years since you put quantum experience up there, what have you learned at IBM?
I think what I learned from that experience really was that there was a whole lot of people out there who wanted to touch and learn about quantum. I think we were sitting there that first night after we launched it, watching these circuits coming in, and people were actually running things, and we were like, oh wow, this is picking up some steam here. And then to this point, we've had tremendous uptake in terms of using the platform to actually generate new papers and research. Thousands of papers have been generated, which would have been impossible for us to do just as individual scientists or researchers studying these devices in our own lab and working with other scientists in collaborations.
And in success, that community could go places that classical computing, even using the large language models of AI, could never take us. So it's not just speed, it's actual accuracy. When we're using classical, no matter how infinite we get, it's an approximation.
Right, absolutely. It's absolutely not a question about speed. The whole point of the quantum computer and what it can do is that it can give us the ability to actually get potentially more accurate results, also get results that otherwise are unattainable using a classical computer alone.
Companies like Google, Microsoft, and Intel are all exploring the potential of quantum computing. But there's also a new group of contenders, startups, that are betting it all on the hope that quantum tech will one day become profitable. One of those firms is Maryland-based IonQ. Its CEO is Niccolo De Masi, who believes he has the best horse in the race.
We supply quantum computers to our both federal, state, and commercial customer partners. We also provide quantum key distribution, and we do that both on the ground and up in the heavens. Quantum key distribution is effectively quantum cyber security. And we're very focused on this not being just proof points in the lab, but doing useful quantum advantage examples for our customers and embedding ourselves into their workflows on an ongoing basis.
So what will it look like as we go beyond showing so-called quantum advantage in the lab and embedding it into real-world workflows? One place people look to first is in the life sciences, work like Dr. Garcia is doing at the Cleveland Clinic.
An example of something that we've done is we've taken some of the algorithms that we've worked on for chemistry, and alongside Cleveland Clinic, we've started looking at different chemical processes that they really care about. So you can think about this in the larger context of, therapeutics design, drug discovery, that kind of thing. And really what we're doing with Cleveland Clinic is pushing the boundaries of algorithm development, methodology, of using quantum computers, again, in concert with classical computers to come up with solutions to problems that they care about. Protein folding is definitely one area, mRNA, secondary structure understanding, how things like come together and how they look in sort of 3D is a very interesting area, as you can imagine, as you're trying to understand how these things fit together in a biological system.
It isn't just life sciences that could be revolutionized by the addition of quantum computing. Financial markets are another target of opportunity. IBM scored an early advantage this year when HSBC said it used the tech company's Heron quantum processor to make a 34% improvement in predicting how likely a bond will trade at a given price.
I think there's a lot of excitement in the market space as well, right? Especially because optimization is certainly in another area which we know is a classically difficult problem. And from the point of view of actually using a quantum computer to address optimization, there are many threads there in terms of leveraging this kind of large exponentially computational space to handle problems such as portfolio optimization, right, or risk management, right? So there's a lot of interesting ideas there that are being looked at by various financial institutions.
What I can say at this stage is portfolio theory, options pricing, these are very much now accessible from a quantum advantage perspective using our new Tempo system. Quantum key distribution and cybersecurity, that is, of course, front and center for financial services on a global basis. And so security and integrity of the data flow is, of course, vital. I always like to jokingly say that you can spot our quantum security customers because they are not in the news for data breaches.
Even agriculture could benefit from quantum computing in ways we haven't yet imagined.
Understanding processes such as nitrogen fixation to make things like better fertilizer, right, to help us grow better crops, right? understanding things that are critical in impacting climate change, right? And in terms of how carbon is handled, right? Other things including in better batteries, right? In terms of materials discovery.
The potential may be great, as are the investments being made. But when can we expect to see these potentially dramatic results? It turns out that that depends on whom you ask. IBM has made getting to quantum advantage in the real world a strategic priority and has a timeline of getting there in a big way by 2029.
Our roadmap really shows the detail in terms of how we want to get from today to 2029. In between, we have this real important milestone also that we believe that with the community we'll be hitting quantum advantage, right? Where there'll be some problems and claims of advantage where we'll see quantum really surpassing any classical methods of solving certain types of problems, right? And we are looking at various ways of showing that academically, scientifically, and also empirically from the ground up in terms of compared with various kinds of classical methods today. And then we're building a lot of it's in the end, it's like architecting a large skyscraper. We're building a lot of the foundational elements so that when we hit Starling in 2029, all the applications that people have been developing, all the software stack, all the eventual software libraries, they're still going to work, but they're going to work on a machine that's even more capable, something that can run hundreds of millions of gate operations compared to several thousand of gate operations on the advantage level machines that we're building today.
IBM says it's on track to have quantum computing pay off in a big way by 2029. But IonQ's Damasi says they're already there.
So our machines we announced on September 12th at our Analyst Day are 36 quadrillion times more powerful than anyone else's machine, and that gap is increasing. Not only do we believe we are 5 years ahead of anybody else in the quantum computing business, whether it's government programs, adversaries, or commercial companies, but we also have the lowest unit economics. So we're able to build a fully fault-tolerant 2 million qubit system and keep our cost of goods sold under $30 million. Taking that together, it means that we're a fully fledged quantum internet solution. We can provide our customers a platform of computing, cybersecurity, networking, communications, and sensing, and there's no other company in the history of the world that's ever been able to supply a complete quantum internet.
Everyone in the quantum business seems to agree that Einstein was wrong, that it's either coming soon or is already here, and that it will be big. But figuring out who's ahead in this race sometimes feels like predicting those dice. IBM says it's ahead because it has more total qubits in its machines. IonQ says it's not the number of qubits, but the number of algorithmic qubits, putting it in front. And quantum company Quantinuum has yet a third measure of quantum volume. Maybe we shouldn't be surprised that there isn't a single measurement. It's like those qubits that are both ones and zeros at the same time, until they're observed. And it looks likely that we will all be able to observe what quantum computing can do for us in the very near future. Up next, an aging population meets lower interest rates. It's a problem countries throughout the West are facing. We tell the story of what the Netherlands is doing about it. This is a story about nest eggs. Those nest eggs we're all supposed to be putting away for our retirement years, with or without the help of the government or employers. Unfortunately, too many of us count on support that may or may not be enough to carry us in our later years.
We have still 57 million Americans who don't have any savings or any retirement plan.
Whether it's state-funded pension plans for teachers and policemen or Social Security for everyone, we all know about the looming problems in providing adequate income for retirees in the United States. But it's not just the U.S. that has a problem.
Many countries made provisions for those promises, and now promises are being cashed in. And many countries are saying, oh, wait, we don't want to pay the bill.
Teresa Ghilarducci is professor of economics and policy analysis at the New School in New York and author of Rescuing Retirement with Tony James. The challenges faced by retirees around much of the world are reflected in higher poverty levels of those over 65, with the OECD reporting that 40% of the elderly in Korea live on less than half of the median income in the country, and the United States just under 25%. Ghilarducci says one of the reasons is lower interest rates.
The life expectancy does not put a strain on pension system, but what has changed is over the past 20 years, there was a regime of very low interest rates, for lots of reasons. One of them was the financial crisis. A lot of it was the way that we managed our economies was to make sure that capital investment was low. That distorted a lot of decisions, but one of those things that it distorted is that the safe assets, like government bonds, didn't pay as much.
The U.S. is hardly alone in facing the coming retirement crisis, but one country, the Netherlands, is doing something about it. Adrian Rijker's firm is one of those putting those funds to work.
In the Dutch pension system, in the second pillar, there are around 1,600 billion euros of assets under management, which equates to around 1.5 times the GDP of the Netherlands.
That 1.6 trillion euros in Dutch pension assets accounts for 59% of all European pension funds, while having only 4% of the population, which means that it ranks near the bottom of the OECD numbers in elderly poverty at just under 5%. But despite having more assets set aside for retirement than any other European country, the Netherlands is about to overhaul the fundamentals of its pension system.
Now we are moving from defined benefits to defined contribution. And the reason for this change is mainly to increase the sustainability of the fund towards the future.
At first glance, the math seems straightforward. The old model wasn't sustainable. It was time for something new. But the debate over restructuring the system was anything but simple.
The private pillar is what is in the process of getting reformed now. That reform took a number of years to reach. Discussions started in the early 2000s after the dot-com crisis, when a number of Dutch pension funds saw their coverage ratios drop. It came to a conclusion sort of around the start of the pandemic, when the shape of the current pension reform was decided upon.
Stan Voiger is a senior fellow in economic policy studies at the American Enterprise Institute and director of the Netherlands America Foundation.
That didn't mean, of course, that the political discussions around the reform completely dissipated. In the outgoing government, the Chow cabinet that was in place for the past year or so, there was one political party, the New Social Contract Party, that was quite aggressively opposed to the pension reform as it had been designed, and they in fact tried to derail it by letting individual workers and retirees vote on an industry by industry or occupation by occupation or even firm by firm basis on whether to remain under the old pension system, which is a defined benefit system basically, or whether to accept transition to the new, more collective defined contribution system. That effort by them ultimately failed. It lost a vote in Parliament, but only barely. And I think that was really the end of political uncertainty around this pension reform. Not only because that vote failed, but also because the Chow government fell this summer. We had elections, and the party most associated with those efforts to basically undo the pension reform to a significant extent, that party lost all of its seats in Parliament.
The Dutch pension plan changes may be controversial, but necessary, given the larger forces that all retirement plans in Western countries are facing.
The move to defined contributions is something that we see all across the globe. If we look at the pension index that is published yearly, if you look at what pension advisors and actuaries are saying, exactly, these changes are not specific to just the Netherlands, but because we have such a large pension buildup, we have so much capital in the system, very high adequacy rates, it is very prevalent in the Dutch system. Since the global financial crisis, interest rates have been in steady decline, mainly because of monetary policy and because of the way that pension liabilities are valued. They have a direct link with interest rates. And as interest rates decrease, the liabilities of pension funds increase, and thus place a burden on the pension fund's sustainability. But also on top of that, you have longevity, which has increased amongst the participants, and coverage in the Netherlands of the second pillar pensions is very high. The way in the old system that we had, the way it worked is that employees would usually stay at the same firm that they started at or stay within the same industry and work until their retirement age. And if this happened, the current pension system was perfectly equipped for this. But nowadays, we see more and more people moving away from a lifetime employment and moving more into self-employment.
One way to address the increased number of people relying on their pensions amid lower interest rates might be to extend the time when people start receiving their benefits. But that is not the way the Netherlands chose to go.
The reforms mainly are in the way we invest and changing from defined benefits to only defining the contribution.
The Dutch system is designed to increase the size of the available pie by permitting pension asset managers to invest in higher risk and higher yield assets for younger workers with many years to go until their retirement.
You now go to a more individual approach with your collective investments in that you have to see what individual investors need at certain age groups. So for instance, a young person on average has less financial capital, but still has a lot of years to work in its career. And what that enables younger investors to do is to take on more risk, because the biggest determinant of capital buildup at a young age is the contributions you get each year. But as you near the end of your career, contributions become less of a big part, less of a big influence on the income that you will have on retirement. And the income or the focus shifts from contributions to investment results that should be stable and lower in shocks.
Whether permitting more flexible investments, particularly riskier ones for earlier in a worker's life, will work or not, it does relieve the pensions from facing obligations greater than their resources, but also means that one's benefits could go up or down depending on the markets. Getting people to agree to this big change took time and all the stakeholders working together.
One distinguishing feature of the Dutch system of policymaking is that there is a lot of focus on consensus building between employers, employees, and the government. The fact that the Netherlands has these structures that facilitate the coming together of business and labor, I think is particularly helpful in the pension context. There are lots of political problems where there are all sorts of other stakeholders involved, but in the pension context, it really still is employers and employees who have to come together and reach agreement on how to design the pension system.
What can the rest of the world learn from the Dutch in providing for retirement? Perhaps a lesson in persistence. The most recent changes are just the latest in a series of attempts at pension reform.
Go back to the 80s under Ronald Reagan, when they did take steps to try to extend Social Security. What made it possible then that doesn't make it possible now?
Well, what made it possible for a bipartisan commission and a fix to happen was that the crisis was only 1 year away. It had to do with surprise inflation and a surprise among the actuaries that they wouldn't have enough money in the shortfall. So money needed to be infused into the system immediately. And so the Greenspan Commission under the Reagan administration recommended that the payroll tax be increased. And everybody agreed. Later, when it came to Congress, there was some political effort to say, well, if we're going to raise taxes, we have to really look to see how much the taxes have to be increased. And so that's when they looked at the past and said, well, since everybody's living longer, then we should have a system that represents that and will raise the retirement age to 67. But that cut and benefit was going to be in the future. And they all agreed they needed an infusion of cash and taxes were increased. Maybe that's what we need to raise taxes, is to have a real look at what taxes pay for. And everyone likes their Social Security benefits.
Whether it's relying more on the capital markets like the Netherlands or turning to taxpayers to contribute more. The United States and other Western nations have some tough choices to make, and they need to be made sooner rather than later as people live longer and we want to provide for them without stealing from the future. Coming up, getting to zero emissions despite those data centers. Finland leads the way. This is a story about featuring a problem instead of fixing it. This month at COP30 in Brazil, world leaders are trying to get back on the path to net zero emissions, despite the huge and growing demand of data centers for more energy. But one European country is already a decade ahead. Finland has set the most ambitious climate target in the world, pledging to reach carbon neutrality by 2035. And it's featuring the problem of data center growth to get there. Bloomberg's Tom McKenzie has the story from Helsinki.
Finland, home to 5 million people and 3 million saunas. Here, warmth isn't just a comfort, it's a culture. But now, the nation that has perfected staying warm in any condition is finding a new way to do it. 50 meters below the streets of Helsinki, a hidden network of tunnels hums with the sound of machinery.
Wow, so where are we? We are at the Helen heat pump station where we do cooling for the Helsinki data centers. And we take the cool and sell it as a heat for the Helsinki households.
Our guide through this underground maze is Olli Sörkö, CEO of Helen, one of Finland's largest energy providers, and the company turning data center heat into power for the city. Here's how it works. Above ground data centers, the engines of our digital lives, generate vast amounts of heat as they power everything from AI to streaming video. That heat is captured and piped into Helen's system, where heat pumps raise its temperature even more and send it through the city's district heating network. The same system then returns cooled water back to the data centers. It's a test case for whether our growing digital appetite for energy can be contained.
When you have partners like Equinix and Microsoft and Telia come to you to work with you and partner with Helen, what are they getting exactly in that partnership?
They have a problem with heat and they need to cool down somehow their premises. And our job is to sell heat. So the starting point for discussion is really good. And in the end, we can actually monetize their problem.
Can you just unpack the business part of that?
So in normal case, if you build for example, 100 megawatt data center, almost all of that power, practically all of that turns to heat. And they need to get rid of that. They need to invest in heat pumps and all kind of cooling equipment. And if they cooperate with us, they don't have to do that investment. We do it for them, and we take the heat out. And on top of that, we monetize the excess heat by selling it to our customers. So they save all the cooling cost and it turns to business for us.
So that's a big CapEx outlay for you.
Yes.
And CapEx that they don't have to be putting and factoring into their spending plans.
Exactly. The CapEx is needed, but it's done by us and we can get a very good profitable business around that CapEx. So it works for us.
For the local community, the benefits are tangible. Electricity prices that sit below the EU average. Helen's newest partnership is expected to provide warmth for roughly 1,500 homes.
We have been able to increase our profits. At the same time, we have now lowered our prices 2 times in a row during the last 2 years.
The impressive progress in Helsinki is set against a challenging global backdrop. According to Bloomberg New Energy Finance research, data centers could consume about 4.4% of global electricity by 2035. If they were a country, they'd rank 4th in electricity use, just behind China, the US and India. And cooling them already takes up nearly 1/3 of that energy, according to the World Economic Forum.
So this is the bus of the internet and our digital society. So in here you have what we sometimes refer to as clouds.
Helen manages the heat, but it's Equinix that runs the data centers, more than 270 of them worldwide.
A data center is a part of everything we do digitally.
Regina Donato Dahlström heads their Nordic operations.
So inside of these are servers that are co-located by enterprise customers of Equinix, and connectivity, so connections. So altogether we host over 490,000 connections at Equinix.
490,000 connections, and those connections and the work that's being done by these servers creates a lot of heat. You can feel it here in the data center.
It does, it does. Managing the heat is one of the larger parts in operating a data center.
The heat, a reminder that every click, stream and search has a footprint somewhere in the real world. Managing it is one thing, finding a way to use it sustainably is another.
The way we measure our data centers is very thoroughly with efficiency measures per each square meter. That's on top of mind of any data center operator, because that's money. And it's also a proof point to how good of a data center you have towards your customers. On top of that, we add back to the society in which we invest in infrastructure.
Around the world, the race to build for AI is putting new strain on power grids and sparking a backlash. A Bloomberg analysis of wholesale electricity prices across the US found that electricity now costs as much as 267% more for a single month than it did 5 years ago in areas located near significant data center activity.
When you look at some of your competitors in the data center field, is there ever a sense of frustration or kind of head in your hands moment when you look at the fact that a lot of these data center operators don't seem to be thinking about all the different components that go into it in terms of addressing the energy needs and the sustainability piece?
No, saying that a data center is a data center is like saying a factory is a factory. We do co-location services for enterprises, and I would say that respecting my peers in that part of the data center industry, most of us do care about sustainability.
I guess the critics would say in this rush to build out for AI, that corners are going to be cut when it comes to energy and to sustainability.
And I think in any of the technology waves that we've seen, whether that was IoT or 5G or building out broadband, yes, there are some that get it wrong, there are some that cut corners, there are some that think they've got it right, and then actually the application of the services changes. I think this is no different.
The question now is, can the race to get there first coexist with the desire to get it right? Nowhere is that question more urgent than in the US, home to more than 5,400 data centers, more than all other major economies combined. And most of the electricity to run those data centers still comes from gas and coal, which are also expected to meet much of the country's new power needs over the next decade. Put simply, Finland may offer a glimpse of what's possible, but the real test is whether that model can scale worldwide. It's a question that Noah Nkonje has put a lot of time into answering.
The Finnish case is slightly different, and across Scandinavia, because they have a lot of existing heat networks, and in a lot of other countries they're not as well developed for heat networks. Having said that, it is still possible to apply some of the learnings. One of the key ones is working with a utility or heat network operator that's keen and supportive.
Nkonje pioneered the technology Equinix uses here in Finland and says its applications could be endless.
It's important to point out that the heat export will tend to only work in the right types of climates, so those climates where there is a need for heating. So it won't be applicable, for example, in Dubai or South Africa where it's a very hot climate. So it'll be probably mostly Northern Europe and the northern part of North America as well. And so what tends to be the limiting factor isn't whether you can technically connect to the data centers, but it's usually whether there's a partner who's actually willing to develop a heat network and make the capital investment.
Do you also do it because it's a valuable revenue stream?
It's not a really significant revenue stream compared to the overall data center business. So we're not looking at heat export as a new revenue stream. We're looking because it supports our customer sustainability targets and reporting. It also helps the communities where we operate to cut carbon emissions and also to become more energy independent as well.
And the model hasn't gone unnoticed. Microsoft, one of the world's largest cloud operators, is building its own version, expanding the idea at a massive scale. Ian Doherty leads the company's cloud operations in Europe, the Middle East and Africa.
We're very proud of the project that we're working on in Finland. We're working with Fortum to leverage the waste heat from our data center to decarbonize their local heating system and provide heating to local homes. Over 250,000 local homes, in fact.
In the data center race, efficiency is the new currency, and even the world's biggest hyperscalers aren't immune from the pressure to balance growth with sustainability.
Clearly, AI is growing in its use case and diffusion across the globe, and we're seeing that in our own business. And clearly, we need to do more of the same things in sustainability and contract further renewable energies. And so there's a lot of great opportunities that we have ahead of us.
Momentum is building. In Finland, almost 100 data center operators are in discussions with Helen, exploring projects that would feed their own excess heat into the city's energy system.
What do you think your example says about Finland's approach to decarbonising its economy, but growing at the same time?
Well, I think and I hope we can show to the rest of the world that you can do the decarbonizing in a profitable way. Because I don't believe it's going to happen if it's forced by state or EU or any other regulatory issues. You have to find a way how to go to CO2 zero so that you can make money with that. Then it starts to happen. And I really hope we can be an example how that is done.
In a moment when our digital lives demand more than ever, Helsinki offers a quiet reminder that progress isn't measured only in speed and scale, but in the balance we keep as the world races ahead.
Up next, the chips that quantum computing will need. We've heard so much about the GPU chips AI needs, which have catapulted NVIDIA to the top of the leaderboard. But what about quantum computing? How are they different? And who's making them? Jerry Chow of IBM gave us a tour at the Thomas J. Watson Center in Yorktown, New York.
So this is our IBM Quantum System 2.
Which is the most recent one.
Most recent one. It is also a infrastructure that is built with modularity and scalability in mind, built for data centers, right? So the way to think about it is really this is a modular architecture. What's right behind us right here, this is actually the cryogenic part of it. So inside here, there's actually a cryogenic system which cools down.
That chandelier that we saw in the other room.
Chandelier, yeah. Cools down in the moment, there are 3 Heron processors, 156 qubits each, that are cooled inside of this cryogenic infrastructure. And the idea is that over time, that kind of cryogenic infrastructure can be modularly scaled. The footprint can be increased. And then hanging off on the wings over here are actually classical control electronics. So the pieces that generate the signals to manipulate the qubits, read out the qubits, they're all in here, right? And they're actually located right next to it because we need to make sure that they have short time scales for the control and latency. But similarly, as you need to scale to a larger footprint, we can scale the amount of control electronics that are located right around it. But overall, this is really designed with that in mind.
But if I look behind there, it would look like a rack like I see in a data center, like a classical computer.
It would look like classical racks of electronics. We have, at the moment, these are based off of FPGA control board. So this is actually our latest Nighthawk quantum chip, right? And so the Nighthawk is 120 qubits arranged in a square lattice, so it's more connected than we had in the Heron processor in the previous generation. But what you're looking at is the chip mounted into a printed circuit board. This printed circuit board You can see it has space for where the connectors come down. These connectors come down to bring the signals to manipulate the states of the qubits or to read them out. And then this is basically bolted and mounted at the bottom of our dilution refrigeration systems at 15 millikelvin.
But is this the chip right here?
That's the chip right there.
And other than this is the printed circuit board on the flip side.
Yeah, so it's mounted up into this printed circuit board, and then the signals are being carried out to all these various connectors.
And does one of these chips go into one of those chandeliers?
Yeah, so effectively we're able to fit a varying number of these into cryogenic infrastructure. A big part of that comes down to not necessarily limitation of the size of this, but the size of the kind of wiring that comes down. And so a big push of how we're scaling infrastructure comes down to miniaturizing some of the wiring and the cabling and miniaturizing other components, right, that are within, so that we can get more control for larger numbers of chips within the same kind of cryogenic footprint.
So I'm going to go way past what I understand. Back in the old days of sort of electronics, you talk about whether they're rigged up in series or in parallel. Right. If you put multiple chips inside one, is there an analog to
so that
series or parallel?
That's actually a funny point there. Like, so you can place these multiple chips inside. We actually are going to be connecting them with cryogenic quantum links over the next year. So we actually have this technology that we actually demonstrated at first last year as part of a different architecture that we have. We call it Flamingo. But it actually allows us to actually scale these and network in a quantum way these various chips together. Wow. So that's one thing. There's already this kind of this strategy for scaling module by module. Another way is actually that there's classical communication networks in the control electronics that also lets you communicate between these chips too, so that you can actually perform a circuit on one, measure the qubits, and in almost real time decide to do something on another chip. So this kind of dynamic circuit piece is also another capability that we have built as part of our overall infrastructure and platform.
Does adding more chips reduce error?
So that piece is that's not how we're approaching the error correction strategy, right? So the error correction strategy comes down to actually a fundamentally different layout of how we are arranging the various qubits on the device. What that does in terms of having multiple chips really allows us to run a variety of different types of quantum circuits. So you have different kinds of applications and algorithms that might be possible by leveraging this kind of tight coupling of different chips. So this chip is actually what's on. So this is actually a stack of two chips. So there's actually a butter side down and another chip that comes on top. That's what you're seeing, the back side of that.
Right.
And this is the piece that gets mounted up onto the bottom of this board.
But there are several of these, right?
Yes, this is several of these.
There's a lot of these.
Yes, these are many Nighthawks, right? So we will cut. We dice these out and package them and then put them in
back to front, essentially on top of each other.
Yeah, and you can see this is 300 millimeter scale.
This is silicon.
Silicon.
And then it's etched with a sort of lithography
all kinds of lithography tools and techniques that you would certainly be familiar with for your standard CMOS processes.
For GPUs or something.
Yeah. So this is actually the inside of one of our testing fridges. This lab actually we're in is our quantum test and characterization lab. We're
testing the chips?
Testing the chips. So a lot of the either Heron or Nighthawk processors, right? After they come out of fab, we go through a series of qualification steps. Some of them are room temperature tests. Some of them are actually cryogenic tests when they're ready. So that's what this lab is for us to actually qualify and characterize the performance of some of those devices before we decide whether it's good enough to go into, for example, a data center for deployment.
So this basically you recreate the temperature from what you'll use in the quantum computer.
Right. We effectively recreate the environment in which it would be deployed in, but in order to get out all the salient parts and characteristics of the device to judge that, this is going to be a good one.
And how cold does it have to get?
15 millikelvin, right? So
okay, so explain that to those who don't think in Kelvin normally.
Yeah, you don't think in Kelvin. I guess 0 Kelvin is absolute zero. right? Minus 273 Celsius, right? And then 0, we're at 15 millikelvin, which is 0.015, right? And if you think about, we always say colder than space, because space is in around several Kelvin, right? Cosmic microwave background is in the several Kelvin range. So, you know, orders of magnitude colder than that.
And you get there through liquid helium?
You get that through 2 stages of cooling. Okay, so there's liquid helium itself. If you just had it, had it as a liquid, is 4 Kelvin. We actually don't use it in its liquid form, per se. We have what's called a pulse tube cooler as part of this. It's actually the noise you hear. It's driving a compressed circulation of helium. That part of it gets a large part of the infrastructure down to around 4 Kelvin. It's actually up at the top stage there that gets down to 4 Kelvin. But hanging off that is another closed loop refrigerator. It's called a dilution refrigerator. And it uses a different cryogen. It uses a mixture of helium, which is, you know, balloon helium, and helium-3, which is an isotope of helium. So helium typically has two protons, 2 neutrons. You knock off one of those neutrons, you have helium-3. So it's a rare isotope of helium that doesn't exist a lot of places, but we have enough of it in the world. But it is part of the mixture that is used to make these machines actually cool down to that 15 millikelvin.
That does it for us here at Wall Street Week. I'm David Weston. See you next week for more stories of capitalism.